How much dividends did I receive this month, and how much will I have to pay the taxman's claw? I can already sense his footsteps approaching, and it won't be long before he pays me an unwelcome visit. In this video, I'll show how much I've received from both share dividends and also from premium bond prizes. I started investing way back in 2009, drip feeding spare money into large cap UK companies which pay dividends. When I receive the dividends, I don't spend the money. Instead, I reinvest it back in to produce even more dividends. When I eventually retire, I plan to live off the passive income generated by my investments. This is not investment advice, and I'm just showing you my own journey. On the 7th of November, I received a payment from the house builder Persimmon. The shares are up this year 6.7% and a dividend yield is 4.8% spread over 2 payments. This screen shows how the dividends per share has changed over the years. This month, Persimmon paid out a total of £30. To see how much I hold in the companies mentioned, then I've listed the totals in a video description. Also on the 7th, it was the turn of British American Tobacco to pay out. The shares are up 43% this year, and not only that, the dividend is high as well at 5.7%, well above the average for the FTSE 100. The dividend is spread over 4 payments a year because British American Tobacco is a quarterly payer. You can see here the company has a good track record of raising the dividends over the long term. This month, British American Tobacco paid out a total of £230. If you enjoy these videos, then please tap the like button as it really helps out the channel. On the 21st, I received a present from Tesco. The company has had a good year with the share price rising 21.6%, and there is also a dividend of 3.2%, which is average for a FTSE 100 company. You can see here that over the last 8 years or so, Tesco has been raising the dividends per share, a very good sign indeed. This month, Tesco paid out a total of £160. On the 28th, it was the turn of Greencoat Wind Energy to pay some dividends to its shareholders. Greencoat owns and operates a large portfolio of wind farms in the UK, which generates around 1.5% of the UK's domestic electricity demand. The shares have not had a good year, however, down 22.6%. Greencoat is a quarterly payer with an absolutely huge yield of 10.2%. A yield this high does concern me a bit, and if the company cannot afford to pay the dividend, then it could be cut, and that often leads to a share price fall, as investors become worried. So far, however, Greencoat's dividend history is solid, and the company's policy is to raise it in line with inflation. But there are no guarantees, of course, and anything could happen. This month, Greencoat Wind paid a total of £190. On the subject of electricity, did you know that energy prices in the UK are set to rise yet again in January 2026? The energy regulator Ofgem recently announced a 0.2% rise of the energy price cap for the period covering January to March 2026. I'm particularly interested in electricity prices at the moment as I've had to replace my car recently, and I've decided to go electric for the very first time. My supplier of choice is Octopus Energy. I've been with them for over 4 years, and if you are thinking of switching to this award-winning energy provider, then it will give us both £50 each of credit if you sign up using my link in the video description. Now, onto the monthly premium bond draw. I only use premium bonds as my emergency fund kept out of the market on purpose, so hopefully I never need to sell my shares and can allow them to compound over time. The headline prize rate is 3.6%. There is 1 draw a month, you have easy access to your money, and there is a chance to win £1 million each month, and all winnings are tax-free. The first £1 million winner this November was based in Shropshire and held the maximum of £50,000 in bonds. The second lucky winner of the £1 million prize was based in York and also held the maximum of £50,000 in bonds. It is possible, of course, to win the million holding just a single bond. But the more you have invested, the greater your chances of winning a prize. In order to win an average of 1 prize a month, you would currently need to hold £22,000 in bonds. No £1 million for me this month, but I did manage to win 2 prizes totalling £75. The bar on the left shows my expected winnings this year so far with £50,000 invested, and the bar on the right shows what I've actually won. As you can see, I'm a bit behind at the moment, and with only 1 month of the year left, my hopes of matching the expected return are not high. So the total passive income this month was £685. And here comes the dreaded taxman's claw to take away some of my money. Fortunately, this month all of the companies which paid out dividends are safely protected inside a stocks and shares ISA. So Mr. Claw, you are not going to get a penny from me this time. It's been a bit of a wasted journey for you, but since you've come all this way, how about a nice civilised game of chess? There we go, pawn to d4. Now, what are you going to do about that? Now for my passive income summary. The green bars on this graph show my passive income for the first 11 months of last year, and the blue bars are for this year. All figures are after tax, so you can see how much I actually get to keep. This chart shows how my average monthly dividends have changed since I started in 2009. This is just share dividends and does not include premium bond prizes. I find it really motivating to see the average monthly dividends rise over time. At the time of this video, I'm receiving an average of £1,519 per month in share dividends after tax. It's important to remember that dividends are only part of the story. There is capital growth as well, which makes up the main part of my total return. Let's look at the full picture so far for 2025. At the start of the year, the portfolio stood at 512k, and at the time of this video, it's increased to 662k. The total amount of new money I put in from wages and savings this year is 22k. I've put more in than normal during the April downturn to try and capitalise on lower prices. This gives me a net gain of just under 128k. So despite all the stock market turmoil this year, the portfolio has done fairly well. These are of course unrealised gains, as I've not sold anything yet. I very rarely sell anyway, as I'm a buy and hold long-term investor. Here are the companies I own which will be paying out in December. There are 12 in total, so this should be a very good month indeed. And if you don't want to miss that video, then why not subscribe to the channel? It's absolutely free. The average yield of the FTSE 100 is currently 3.2%. My own portfolio is even lower at 2.8%. But as I've been investing for so long and companies generally raise their dividends over time, my yield on cost is now 6.2%. So what have I been buying this month? Well, I've actually not bought anything this month at all. November is one of the lowest for dividend payouts. And as I've already mentioned, I've had to replace my car recently, so I haven't been able to put new money in. Normality will hopefully return in December. When I first started investing in 2009, my average monthly dividends for the year was just £8 a month. And today this figure has risen to over £1,500 a month. To see my entire dividend journey and how long it took to reach each stage, then click this video here and I'll see you over there.